Hi viewers, Happy New Year. I'm Jayashree Kurup, editor MBTV, and I have with me the CEO of Magicbricks, Sudhir Pai. Hi Sudhir, let's talk about the trends in real estate in 2019. 2018 has been a dramatic year when we saw completions, we saw consumer activism, we saw end users entering the market as buyers of completed projects. What are the trends that you expect in 2019?
So Jayashree, first of all, Happy New Year, and a Happy New Year to all the viewers of Magicbricks TV. So if you see the last several years in real estate, we've had pretty interesting years. So if you look at the last 2 or 3 years, barring some regulation, which is good for the long term, some interesting trends in some segments which are doing well, but otherwise real estate has really had not its best of years if you look at the last two. But if I was to do some crystal ball gazing right now and to imagining what 2019 could be, I'd submit the following. One, that prices would continue to remain muted. I think we'll see some minor price increases in a lot of localities, but there's no reason to believe that prices will rise in a meaningful or a big way in the next 12 months. The second one is, despite prices being muted, I think we should see a lot more transactions happening because the price to income ratio is falling favorably. The third is, I think we should continue to expect that the rental markets will strengthen. Not just that we'll see more transactions in rentals, but also I think we'll see the development of a lot of specialized rental units which enter the market. Besides this, I think technology will continue to make good inroads into real estate. We'll see a lot of tech adoption. And lastly, affordable market, which has been doing well for the last year, I think will really come of age.
Sudhir, for the benefit of our viewers out there, what does income to price ratio mean and how does it impact their buying in the real estate market?
So this is a very important ratio, right? Because this ratio actually signals affordability in the market. So what an income to price ratio actually means is, the way it's computed is, you take the median price of real estate properties which are available in the market and you divide that by the median income of that city, right? And that's the ratio that you sort of get. Now, if you look at what these ratios have been historically for us, for example, if you look at the year 2010, these ratios have ranged between 4 to 11 based on which city you are looking at. So if I look at some data, Bombay 2010 had a ratio of 11, right? Delhi NCR had a ratio of 6, Hyderabad had a ratio of 5.7. Now, a high ratio really means that homes are in general tending to be a little unaffordable, right? So a ratio of 11 means that it takes an average person 11 years of his income to buy a house in Bombay, right? The lower the ratio, the more affordable the housing, and the more affordable that it gets usually should lead to more transactions. But between 2010 and 2018, this ratio has moderated quite a bit. So if you look at 2018, this ratio has fallen across most cities in India, and the simple reason it's fallen is because while housing prices in the last 4 or 5 years have remained flattish, they haven't risen too much, but incomes have been rising, right? As a result of which this ratio has fallen. So for example, Bombay, which had a ratio of 11 that I spoke about in 2010, the ratio is 7.2 in 2018. And if you take some cities, like for instance Pune or Kolkata or Hyderabad, the ratios are in the range of about 3 to 4. Now that's very, very favorable because usually there is evidence to suggest that if these ratios are 6.5 or less, it usually would encourage a lot of end consumers to buy because homes become really affordable.
Okay, let's talk about which are the markets where you expect action in this year.
We've been seeing searches rising on Magicbricks across most cities. But there was a gap between searches rising and actual transactions on the ground. Yeah. So even cities where affordability was an issue because it was not so affordable, we used to have a fair bit of searches which were happening in the city, which means the underlying demand was quite strong. But that demand may or may not have resulted in actual transactions based on this ratio and of course several other factors as well. But with this ratio moderating in some cities, I think we'll see a lot more transactions in the cities. Now that brings me to your interesting question of which cities should we expect more transactions in 2019. So look, last year at the beginning of 2018 on a show elsewhere, when we were asked as Magicbricks which are the cities that we expect to do well in 2018, the top 2 cities that we had mentioned were Hyderabad and Navi Mumbai, and I think the facts have played out accordingly. These 2 cities I think by and large have done well in 2018. If you look at 2019, basis our data and basis our understanding of markets, I'd venture that Navi Mumbai, Hyderabad, and surprisingly, Noida could surprise us, would be amongst the 3 pockets which we expect should do really well on transactions in 2019, followed by Pune and maybe Gurgaon if it gets its infrastructure in place. These 2 cities could be in the next bucket.
Look into your crystal ball again, and you have said that prices you expect to remain muted. Any more price trends that you would like to talk about?
Prop index that we release every quarter, by and large has indicated, if you look at the last 2 or 3 quarters, that about 60% of the micro markets have shown moderate price increases. And when I say moderate, the quarterly price increases have been in the range of 0 to 2%, right, which is within a quarter. But nevertheless, the prices have increased a bit. And that's been the trend for about 3 or 4 quarters. So one, I guess we expect that to continue. We don't expect to see any sharp increases in prices in a majority of these micro markets. There are several cities where commercial real estate is doing very well. There are pockets where rentals are doing very well. And by what I mean by doing very well is number of transactions are up, even though in a lot of markets like what you mentioned, for example in Noida, a lot of ready to move in stock has hit the market. As a result of which there is a lot more supply for rentals, and more supply is causing rental prices to dip, but it could lead to more transactions.
How do we view secondary markets in Magicbricks?
So secondary markets in India have always been much bigger than the primary market. Even though the primary market, I think, ends up getting the spotlight, the secondary market has usually been 2 to 3x bigger than the primary market, and we expect that to continue. Historically, secondary market used to typically constitute sales from end users to other end users, right? But increasingly what's happening is because a lot of developers have unsold stock, which is getting into ready to move in stage right now. It's a significant component of secondary market today would also be developers selling such stock to end users, right? And since it's ready to move in, we would classify it as secondary market. So secondary market, I think going ahead also, more so because I think there is more demand for ready to move in stock today as compared to under construction stock, would remain at least 2x, if not 3x of the overall primary market by volume.
Sure. And this is something that we have been telling our consumers, and I think we have been drilling it down. If you have bought a house in the last 4 or 5 years, and if that house is incomplete, instead of fighting to get your money back, wait for that, push for the completion of the projects, because completed stock is always more valuable than a stressed asset.
Of course it is.
Thank you, Sudhir.
Okay, thank you, Jayashree.
Please subscribe to Magicbricks on YouTube and click the bell icon to get new videos.